Hi all, it's Catherine Burgess with Burgess Group Compass. We're talking about last week's Boulder County real estate numbers, the national migration trend changes, and how that relates to our local market. So last week we had under contracts pop up from 120 to 134 week over week, and that 134 contrasts with in year over year. In 2018 that number was 68, and in 2019 that number was 92. So it is a far bigger number, and that has actually pushed our year-to-date under contracts up. So we are now close to the 2019 number, which is the higher point of the 2018-2019 parameters. So that is important because that year-to-date number indicates that the under contracts take us to solds, and that tells us that our sold numbers are in alignment with what has been happening historically in our market. So there are a lot of other areas in the United States where those sold and under contract numbers are so depressed relative to their historic normals. So relatively speaking, we are keeping on track with our inventory, though it is much thinner than it has been in previous years. We're still having our same under contract and sold numbers. So that's good. That indicates some health in our market. From a month supply of inventory standpoint, last week we had 1.23 months supply of inventory, and in 2018 there was 1.46, a little bit higher at 1.56 in 2019, and then in 2020 things were ramping up and it was in the 1.7 range. So, and keep in mind that, as we've talked about before, a balanced market is 5 to 6 months of inventory. So below that is a seller's market. So from those numbers, you can see that we've been functioning in a seller's market for many years in Boulder County. What's currently happening is not extraordinarily different from what has happened in recent years. So from a price band perspective, we had something interesting happen last week. 12 units of inventory came to market at the 2.5 million and above category. And typically that's any week we have 2 to 5 of those houses come to market. Similarly, the 1.5 to 2 million range, we also had 12 units come to inventory, and the more normal there is 3 to 8 units. So a little bit lower, less exaggerated than we saw in the 2.5 million plus. And then in the $0 to $500,000 price band, for the second week in a row, we've had a lower than balanced sell-through rate. So there should be more inventory there if you are interested in an investment property or an entry-level property. Now is a good time to be looking. So from a national trending perspective, the migration trend has been so interesting. And in 2019, typically 25%, right around between 25 and 26% of people were searching outside of their home metro area for a new property. And that started increasing in Q1 of 2020. And by Q1 of 2021, we were at 31.5% of people. So a good 5% or so increase in the number of people looking to relocate outside of their home metro area. Now, in Q2 of 2021, we saw that number come down to 30.6%. So why that is important is it tells us that those non-local buyers who have a 30% higher budget, they are potentially decreasing. That number of buyers is potentially decreasing. So the price acceleration that we've seen in the past year as a result of that could be that we've seen the fastest acceleration, and we're going to start to see a slowing of pricing and a diminishment of those non-local buyers. So sellers, as you saw from our inventory numbers, it is still a great time to come to market. We have very, very limited inventory. The number of migrating buyers may be decreasing, which could impact pricing and just how the sale process works. So call us with questions. We're happy to talk this through with you. If you have any other real estate related stuff you want to chat about, please be in touch. And please like, subscribe, and share. We'll see you again next week. Thanks.